Should you partner in real estate or not? That's the subject of this video, and also just looking at the partnerships that you already have, whether you know it or not. So a lot of people starting out have the question, should I partner with someone on my deal or should I go solo? What's the pros and cons? And I want to take a minute to take a look at that and kind of look at it from both angles. And ultimately, I'll just say, it's really a personal preference. I've seen people on both sides have success, and it really depends on what your goals are. It's not really a black and white decision or a right or wrong. And also, whether you realize it or not, you have partners really in every deal. And I'm going to take a look at some of those partners that sometimes are silent and are a little less silent. Again, a lot of real estate investors wrestle with this question. And for me, it's not so much a question of whether I have partners. I know I'm going to have partners, but it's really a matter of, am I going to share equity with those partners? So some investors swear by having partners and some avoid them at all costs. And me, I'll be honest, I personally prefer not to take on equity partners in my real estate deals, although I do have a couple deals with partners. They say that partnerships are like marriages, so choose your partners well. And you're going to expect to have some challenges along the way that you're going to have to work through. But there is a lot of benefits to having good partners in real estate. Again, for me, a personal preference, you need to make your decision, and maybe some of the things that we'll talk about here will make you lean one way or the other. The equity, when I say the equity partnership debate, it's really, is it carving up the deal, carving up the pie? Is it a good idea or a bad idea? So let's start with the obvious question. Should you take on an equity partner? And the real answer, it depends on you, your personality, ultimately your goals, your tolerance for sharing control, your capital situation. You might be in a situation where you don't have any other options than to take a partner. And that is the case for a lot of people starting out. Your leadership style, your timeline, again, just a lot of things to think about when making that decision. And so when equity partnerships can be great, is like if you want to scale real fast or you need a lot of capital, or you want to divide the responsibilities. These are all great opportunities to partner with people. And or you're newer and you need experience and credibility, or you're doing ground up development or larger commercial deals. A lot of times the bigger deals, they're done with partnerships. You found a strong complementary skill set, and there are investors who've built massive portfolios with partners. Again, really, really common. Some literally wouldn't have grown without partnerships. But here's the flip side, and this is where my personal preference comes in. Equity partnerships have some cons in my estimation. The equity partnerships tie you to a person or multiple people, the partnership, and not just a property. So, and people, they don't always stay the same. They don't always have the same perspective, goals, and that can be good and can also create some challenges. Problems happen when work ethic isn't equal. Seen that over the years. Expectations don't match. Someone wants to flip, someone wants to hold for a longer period. Personal finances change. Family dynamics shift. It's not all just business. We live lives. We have families and other things that we like to do. And so do those work well with the partnership? So there's also the big D's, death and divorce, and other things that create challenges with partnerships that you should be aware of. Someone wants to sell early, like I mentioned. Someone stops pulling their weight. Again, just a unbalanced work ethic or contribution to the partnership. So someone becomes difficult to communicate with. So again, you're dealing with relationships. So people's emotions and how they interact or don't interact, their communication style all comes into play with these partnerships. An equity partner can become really a second job, one you didn't sign up for. And so why I personally don't prefer equity partners, again, I prefer simplicity, and as a general rule, the simpler, less challenges, kind of the lazy path, in even giving up at the expense of growing faster, scaling quicker. I'm okay with that. So I prefer full control of the decisions, full control of risk, full control of the exit timeline. And again, there's arguments to be made, with partnerships, you're spreading that risk potentially across multiple, the partnership. Full control over the cash flow, full control over how you're gonna exit, or if you're gonna exit. And then if you do exit, how are you gonna reinvest? So this just fits my personality, my business style, and my long-term goals. And again, just understanding some of the questions and some of the things in advance is gonna help you kind of understand what makes the most sense for you and what resonates most with you. So, and this is important, that it doesn't make partnerships bad. It makes them not right choices for me, again. So again, total personal choice, and I will admit that I think that a lot of times partnerships can really, in a lot of ways, add rocket fuel to accomplishing your goals a lot faster. So here's some other things to think about. You think you're working alone, you're not. So you, like me, you say, I don't want partnerships, I'm not gonna have partnerships with anyone. Well, the reality is in real estate, you always are partnering with people. So here's the part most investors overlook. Even if you never bring on an equity partner, you're absolutely doing real estate with partners. And you say, well, how is that? Well, they're partners, they're just not ownership partners. They're operational partners, and they're crucial. In fact, your entire business depends on them. And let me show you exactly what I mean. So your real estate partners, those without sharing equity, these are real partners in your business. The bank, right? And you're going, oh, okay, yeah, I didn't really think of the bank as a partner, but I guess so. They are lending me the money, and I have an agreement with them. And so they're usually, in a lot of real estate deals, they're your largest partner. For instance, the bank is going to front 70 to 80% of the funds for the deal. And so you think about that, you're bringing 20 to 30%. Great partnership, because they're giving you full control of the asset and the upside on the asset and control, again, but it is a partnership. And then they fund the majority of your investment. So again, amazing. They do set some of the rules, and that dictates some of the influence over your cash flow. You get to dictate the day-to-day operations. You get to dictate the timelines. Once that agreement is made, whether it's a 5-year loan or a 20-year AM or a 30-year fixed financing, but then beyond that, the control is yours. But there is that element of partnership, and yet you don't give them equity. Another big partnership for a lot of successful real estate investors is the property manager. So they're the partner who runs the business for you. And again, you really want to think about real estate as a business, right? Not a hobby or a side thing, but you really want to treat it like a business from day one, even with just one rental. The property manager, as a partner, they're going to handle the rent collections, dealing with the tenant, the repairs, legal compliance, inspections, accounting, leasing, marketing. They are absolutely a partner. Again, just usually not an equity partner. The government, maybe a bigger partner than the bank in actuality, but listed here a little bit lower down the line. They're your silent partner, and sometimes they're not always silent, but whether you like it or not, that you're in business with the government, and you need to be aware of that. They control, for instance, eviction timelines, notice requirements, rent control, fair housing inspections, licensing, tax rules. So they're a major partner in your deal, and they take their fair share every year. So whereas they're not an equity, they do want to get paid. And then the maintenance techs and vendors, your operational backbone, these are the people keeping your asset functional. So plumbers, electricians, HVAC techs, roofers, landscapers, pest control, cleaners, the list just goes on, right? And so good to have a really good partnership with those people. And the jack of all trades, the handyman, the general contractors, the people that you can rely on, do good work and are going to treat you fairly. Your insurance agent is also another partner. A lot of times you don't hear from them. You never talk to them for long periods of time. You just send them a check. But man, when you need them, it is sure good to know such peace of mind that you're covered, and that little issue that turned into a big issue, or that bit thing that came out of nowhere, having that insurance is that's a good partnership. Well, you're also going to consider your CPA, your tax strategy partner. They literally help determine how much you keep, how much you lose, how much you pay, how much you should invest. Again, no equity, but still a partner. You might consider your attorney or attorneys, your legal counsel. But they help you protect your asset. Maybe they helped you form an LLC to get your business started. They help you with paperwork, maybe help you with leases. Maybe you run into a tenant dispute. They're going to help you, giving you feedback with evictions. It's their work plus your property equals a great partnership. So, do you need an equity partner? I think we covered this, but really, here's the truth. Real estate is not a solo sport. Even if you never take on an equity partner, you'll always rely on partnerships. And the question isn't, should I partner? Because as you've seen, you already are. The real question is, should I share ownership with my partners, or should they remain operational? So you might want to ask yourself, do I need someone's capital? Do I need someone's expertise? Do I need someone's risk sharing? Do I need someone's time? Do I want to build faster? What are my goals? Do I want full control? So again, there's really no right or wrong answer, just the answer that fits you. So in closing, here's the takeaways. You don't have to share ownership to build a strong team. You don't have to give up equity to have partners, and choosing not to have equity partners doesn't mean you're building alone. Real estate is done with, again, a lot of partners. And that's what makes it scalable, sustainable, and frankly, just makes it exciting. It's a lot nicer to do life with others, right? So pick a good team, and if partnerships help you grow, use them. If equity partnerships don't fit your personality, don't force it. But either way, you're not building a portfolio alone. And we hope this video is insightful and eye-opening. I know that as I think about these, it helps me sharpen my focus and kind of ask the right questions about my next deal and how I've built to date, and hopefully it helps you. So I appreciate you watching. Have a great day.